And hello, everyone. Welcome to this episode of The Bull and the Bear. I'm your host, Matt Clark with MoneyandMarkets.com. As always, glad that you're with us on this Friday or over the weekend, depending on when you're listening. As per usual on Fridays, I'll bring in contributor Charles Sizemore here in just a little bit. Chief Investment Strategist Adam O'Dell is actually off today, taking a well-deserved day off. So Charles and I will run the ship, and I think we'll do just fine. Before we get started, want to remind you that you can listen to The Bull and the Bear on several platforms. You can listen to us on Apple Podcasts. You can listen to us on Google Podcasts. We're also on Spotify. We're also on iHeartRadio. We video each one of these, so you can see our bright, smiling faces every episode. You can check us out on YouTube. Just go to youtube.com and type in The Bull and the Bear podcast, and we'll see the little green button, and that'll be us. And we're not hard to miss. If you do have any, if you're whatever platform you listen to us on, whether it's video, audio, leave us a comment, leave us a review. If you do have any questions or maybe a particular topic that you'd like us to discuss at any given time, you can email us at thebullandbear@moneyandmarkets.com. That's thebullandbear@moneyandmarkets.com, and we'd love to get your feedback and take any questions you might have. We like to opine about just about everything. So. There's some things we probably won't opine on, but there are a few. Before we get too deep into it, I do real briefly, and I don't do this very often, but I feel like I should just because, and I may wind up regretting it later, and Charles can probably scold me on this when I bring him in, but I'm going to take a bit of a victory lap here. On Wednesday in our podcast, I talked at great length about Tesla, and again, not just to kind of refresh, not to say that Tesla is a good company or a bad company. I just want to look at its stock just as a whole, not look at its company, not look at its CEO, not do any fundamental things like that. I mean, I could go ad nauseum about its management, about its, about all sorts of things. I just really want to look at the technicals and do a little analytical look in terms of Tesla. And it rose, quite a bit. It rose, I think it's 300 and some percent in a very short amount of time. I mean, it's been on a pretty meteoric rise. And then on Wednesday, and I still believe it now, I believe that Tesla could jump a little higher, which it actually did, and then it's going to pull back, which coincidentally today it has, as low as 9% back. Earlier this morning, I think it's hovering at around a 5 or 6% drop today. Really for no reason. One thing about Tesla is that it's a company that doesn't necessarily move with headlines. It just moves for the sake of movement. Not one thing tends to, one piece of news or something like that doesn't really tend to move it very often. And I really don't even think Wall Street analysts play that big of a role in it, because if you look at where most analysts have Tesla, they're still in the $200 to $400 range. So, I mean, I don't know that there's necessarily a lot of analysts news that would move Tesla. So the bottom line is that I still think it's going to pull back. It's starting to pull back now. How long it lasts, I don't know. It could be a temporary pullback for a bit of a jump and then a full pullback, or this could be the start of a downward slide that we see going on for a bit of time. But I think it's going to happen. Tesla's probably one you want to stay away from. But that's not what we're going to talk about today. What we're going to talk about today is, as we've done, in the last few episodes, we tend to take certain sectors and pull out some stocks and just kind of riff about those stocks and what we think about them. And I took a little bit of a cue this week from Adam O'Dell, our chief investment strategist, his Cycle 9 alert, one of the services that he offers. And he actually rated, one of the top sectors this particular week was industrials. And I thought that was kind of strange, not necessarily strange, but I thought is interesting more so because industrials have taken a pretty solid hit with the coronavirus. In fact, from its February high to its March low, the S&P Industrial Select Sector ETF, which is XLI for if you're looking at it, an exchange-traded fund, actually dropped more than 42%. Which is a significant drop, and I think is an even deeper drop than the actual S&P. But now, since it has rebounded off those March lows, that ETF, not stocks in general, but that ETF, which actually tracks some of the biggest industrial-related stocks, has actually risen 50%. So it's seen a very nice comeback, and I think that's why it is peaked on Adam's radar, and rightfully so. So I wanted to kind of talk about a couple different stocks that are very well known in the industrial sector, and just kind of do what we have been, just kind of riff on it and give our take. So I picked out three, and they're all three companies that I would venture a guess that just about everyone knows. If not, you may certainly know what they do or what they make, maybe not necessarily what their name is. So we'll give a little bit of background, and I'm going to bring in Money Markets contributor Charles Sizemore, who's joining us. First off, Charles, welcome. Thanks for coming on Friday.
Yeah, good to be here.
And we're going to talk about it. And I'll start off right away with the first stock. This is one that I have quite a bit of experience with this individual company, not because I worked for them or anything like that, but before I came to be where I'm at now, I was the editor of a business publication, and part of my beat, or part of what I covered, was aerospace. And it just happened that this company was right in our backyard. They had a repair plant, which has now turned into a production line for one of its products, right in our backyard. And it's an aerospace company, obviously, but it also works in missiles, fire control systems, rotary aircraft, aka helicopters, and rotary large scale planes, as well as space systems. So they do some work with NASA. They do some work with, I believe, SpaceX and Virgin Galactic and yada yada. They make certain components for that. It does commercial aircraft work, but doesn't necessarily make commercial aircraft. They make components for commercial aircraft. They're mostly known for three things, and as soon as I name all three, you'll know exactly what I'm talking about. I'm talking the three aircraft they are most noted for is the F-16. The F-21 and the F-35 Lightning, all of which are fighter jets. The last two are the most recent. The F-16, probably the most widely used fighter jet in the world. And in fact, it is the F-16 production line that moved to the backyard of where I used to be. So what I'm talking about, the company I'm talking about is Lockheed Martin Corporation, trades under the New York Stock Exchange under LMT. It is a big company. No question. In fact, all three of these companies, I'll just preface right now by saying all three of these companies are big. They're not small. They have significant market caps. So we'll just eliminate size as a factor to discuss right now because they're all big. So first, I'm going to bring in Charles, and I want him to kind of give me his take. I gave him this list of stocks yesterday on Thursday, and gave him some time to prep and some time to get his house in order in terms of what he thought. So I'm going to turn it over and let Charles start things off, and then I'll give you my take, and then we'll go on to the next, so on and so forth. So Charles, give me your take on Lockheed Martin right now.
It's a good company, obviously, but I'm not in love with the stock right now. What it really comes down to for me is what's going to be the catalyst that sends this one higher. Lockheed Martin, its biggest customer is the government. It's not like you and I are going to go buy an F-16. While it would be really fun to have one,
wouldn't that be cool?
It would, wouldn't it? That's not a consumer item. Their customers tend to be the governments of the world, and that's a very political process. Well, right now, it's not just our government. It's every government in the world right now is figuring out how to plug holes from COVID. They're trying to figure out how to get money into their citizens' hands. They're trying. There's a lot of focus on just getting some sense of normalcy in the economy, right? And so while I guess a big military procurement bill could, in theory, come down the pipeline as a make-work project, I wouldn't really bet on that right now. I don't think upgrading the Air Force is really a policy priority right now. Particularly, you're looking at a presidential election cycle here. As of today, it looks like Joe Biden might win. Who knows? We still have a lot of time before November. But even if Trump wins, I don't know that there's a lot of Republican administrations tend to be more friendly to aerospace and military spending. Of course, I don't know that it's going to matter. I mean, Trump already had a huge military spending bill a couple of years ago. I don't really see room for another one right now. So the stock has been trading mostly sideways. Of course, the COVID price action notwithstanding, in the months before that it was going mostly sideways. It's gone mostly sideways. Well, it blew up in March, of course. Everything blew up in March. Then it recovered in April, and it's been going mostly sideways since. I just don't see a compelling reason for it to break out of that anytime soon.
And I'm going to disagree with you. I like Lockheed Martin, and the reason why I like Lockheed Martin is because of its diversity. I think we spend a lot of time focusing on what their primary sector is, and that is, jets, making fighter jets for the Air Force, for various others. One thing we have to understand is that there are already a couple contracts that have been approved by Congress. I guess to back up a little bit to clue everyone in, before an American company can sell a piece of military hardware to another country, it has to be approved through a process through Congress and then through the White House. And the F-16 remains one of the most robust fighter jets in the world, and it's one that even developing countries are starting to take notice of and want to buy. The country of Bahrain, they're one that, in fact, the Trump administration about 2 or 3 years ago, maybe even longer than that, actually approved Lockheed Martin selling F-16s to the country of Bahrain. India has looked at the potential of making the F-16 its primary fighter jet for its Air Force, and we all know there's been some tension between India and China and things like that. I think, but the other thing is that Lockheed Martin is
India still buys MiGs, right? India's Air Force
actually, no.
is mostly Russian made, isn't it?
No, I think they're actually British.
Okay.
I believe. Don't hold me to that. But yeah, their Prime Minister Modi, I believe is his last name. He has this aggressive program called Make in India, and it's basically to encourage Indian companies to buy from each other, which obviously makes sense. So what Lockheed Martin had proposed to do was to open a plant in India, staffed by Indians, to build the F-16 in India. And I think that's become, I'm not sure exactly where that process stands right now, but it's a very aggressive thing. And it's one thing that I think you're going to see a lot of other industrial companies try to do to try to quell this nationalism type approach that you see, or this reversal of globalization that you see in order to kind of stem the tide, regardless. Lockheed Martin does a very robust part of its business in terms of helicopters. I believe it's Sikorsky that they own and operate. They also, their missile defense systems are also very strong. Overall, I like Lockheed Martin's balance sheet. And even during times most recently, and I don't want to talk too long about it, but most recently they did lose out to other aerospace partnerships to build the new fighter jet trainer for the United States military. They did lose out on that contract. It was going to be billions of dollars. I mean, massive. We're talking about the jet, the computer systems, the whole works, and it was going to be a massive contract. Lockheed Martin actually lost out on it. Despite that, their stock still managed to rise. So I think this is a very resilient stock. I don't know that it's necessarily one that you want for short-term play. I think it's one that is more of a buy and hold, perhaps. But I think it's a strong stock to own. Just to kind of give a little more context, in Adam's proprietary stock rating system, Lockheed Martin ranks an 88 overall, meaning that only 12% of all other stocks rated are higher. So it is in the 88th percentile in terms of strength. It rates above a 90 in both quality and growth, and it ranks an 87 in volatility, and that's good. So, the higher the number, the better. So in at least 3 of his 6 metrics, Lockheed Martin ranks extremely high, ranks in the top 13% of any company on the stock market. So I remain pretty bullish on Lockheed Martin, but not as one that you want to turn around and take quick profits on, one that you probably want to buy and hold for a little bit longer strategy. So that to me is the smart play for Lockheed Martin. Moving on to our second company. This is a company that I'll just, the first 5 words I write will tell you exactly what this company will tell you exactly what this company is. It provides waste management and environmental services, residential commercial customers across North America. You probably know it because you see its green trucks rolling around everywhere. It does operate landfills. It also operates gas to energy facilities. And what this basically does is it captures the methane gas that is created in landfills by the massive amounts of trash that are stored there and converts that to energy, which is then sold on a power grid. Companies have just started doing this, and this company is one of the leaders in doing it. And the company I'm talking about is Waste Management. It trades under the New York Stock Exchange under WM. Charles, give me your take on Waste Management.
Yeah, so I'm mildly bullish on it. I think it's a fantastic company. It's not particularly cheap right now, but really nothing in this market is. So I would say it's a relatively fairly priced stock within the context of a expensive market. Now, longer term, I would say there is still, the longer term thesis on waste management hasn't really changed. It makes sense for a lot of municipalities to outsource waste collection. Why wouldn't you? If the private sector can do it more efficiently, why would you want to why would you want to do that in house? If you can, do it more efficiently, keep your tax bill lower, keep your voters happy, why would you not do that, right? I would say before all hell broke loose with COVID, the stock wasn't really trending higher. It'd been going sort of flat for a while. It sort of popped in January when everything popped higher and then rolled over and died. Since then, it's been recovering really well. I would say if we get any sort of rotation out of tech and into more kind of gritty stocks, this one might benefit from that. I would say longer term, the damage that we've seen from COVID to local economies is not going away anytime soon. For every little small mom and pop business that goes out, that's taxes not getting paid. For every landlord that doesn't, that has seen the value of their properties impaired because some of their tenants are broke, that's property tax that won't be collected. There's going to be a big hole in city, state, local government, budgets for a long time. If you think back to 2008, it took years for the states that were in the crosshairs there, Florida, Nevada, Arizona, California, the states that really got hit hard in the 2008 meltdown, the housing crash. It took them years to recover. So I don't see how this crisis is going to be too different. So I would say that longer term tailwind, if you will, of local governments looking to save money, that should benefit waste management over the long haul. I would not be in love with it at current prices. I would say maybe wait for a dip. But overall, I'd say, yeah, I mean, this is a stock that if I had it in my portfolio, I would certainly not be in a hurry to sell it.
And I agree. I have some concerns about waste management. I'm concerned with its price, but I guess in terms of the industry average, it's in line. I mean, it's up in some areas. It's got a higher price to sales ratio than the rest of the waste collection industry or subsector, if you will. It's got a little bit higher price to cash flow, but it does have a lower price to earnings. It does have a little bit higher price to book. But again, we're in the state of a market now where everything appears to be overpriced. So I'm kind of with you. If you don't own it, I would probably wait for a downturn to see if you can get in at a much better price. I think buying now would maybe realize some gain, but not very much. If you already own it, I'd sit on it. I think it would be a buy and hold type of a stock to have. It's a huge company. It doesn't have a lot of momentum on its side right now. Its value is iffy, but it is a good quality stock, and it's not really all that volatile. And in Adam's system, waste management rates a 58 overall, so it's fairly mid-range in terms of the 6,000 plus stocks that are looked at. But probably not a buy for me. If you own it, fine. Buy it on a dip, perhaps. But I think it's expensive, and the value isn't really justified. So that's kind of where I'm
End of the day, they collect the garbage. They're not reinventing the wheel. They're not.
They're not real diversified. I mean,
well, there are stocks that you can justify a huge premium on if their profit margins are just huge. Something like a tech company with some software company with an effective, de facto monopoly with just massive margins. Yeah, okay, you can justify a premium stock valuation for that. The garbage man, probably not. It's a good company, but there's a price at which it's just not that attractive anymore.
Yeah, don't be misunderstood. Don't let us be misunderstood here. We're not talking about the quality of the company. We're just talking about the stock in general. These are all good companies. We're not trying to say they're good or bad. We're just talking about the stock themselves. And just to give you a little bit of insight on the margins, gross margin for waste management 39%, the net margin only 10%, and the operating margin is only 17%. All three of those, however, well above the industry average for waste collectors. But
For
we're not
a gritty company like that, those are fantastic margins, I might
yeah,
add. But
exactly.
they're not like tech margins, obviously.
No. And the other thing is the subsector that I'm comparing this with is general waste collection, and it's not a very big sector. So it's
No.
not as if you've got waste management, up here, and then you have a bank of stocks that are way down here in terms of their value and their size. So it's not necessarily, I mean, it's apples to apples to a slight degree, but not to a degree that would make those margins just seem overly impressive. So, okay, moving on to our third and final stock today. This one I was a little hesitant with in terms of whether I should put it on the list, only because I have a pretty good idea where everyone's take would be on it. But I think it's worthy of having a conversation. This is another aircraft company that specializes in commercial aircraft. It does work on military aircraft. In fact, its partnership did win the contract for the TX trainer fighter that Lockheed Martin did not get. They were in a partnership with, I want to say Saab, but a Swedish company, but I'm not sure if that's right or not. They do missile defense systems. They work in space flight and launch. They've got a pretty wide-ranging wide-ranging portfolio in terms of what they provide. However, and there's always a but, right? This company has been in the headlines a lot since about September of last year, and not for a good reason at all. And I'll tell you right now that the company I'm talking about is Boeing Company, and it is New York Stock Exchange BA. The reason they've been in the headlines is their best-selling 737 MAX aircraft was grounded due to two very tragic incidents that happened. I think one in Malaysia and one in Africa, I believe. Very tragic, and it was due to some guidance systems and some autopilot systems that had failed. They've been under very tight scrutiny, but basically they've had to halt production, not just because of COVID, but because their most popular jet has been grounded. They also do the 777, which is actually made in South Carolina, but they've also halted production on that as well. They do work in the military sector. They did do the B-1B bomber, which was supposedly the predecessor to the B-52. Didn't quite take off, no pun intended, the way it should have. They do build the Chinook line of helicopters, which is very popular with both the Army and the Marines. And they also do the FA-18 fighter jet, which is also a very popular fighter jet, mostly with the Navy and the Marines, the FA-18 Super Hornet and variations thereof. So we're talking about Boeing. And like I said, I kind of already know where this conversation is going to go, but I think it's an interesting conversation to have anyway. And Charles, riff on Boeing for me.
So, fun fact, there was a recent Supreme Court case that found that if a financial advisor recommends Boeing to you, you are within your legal rights to pull out your handgun and shoot them. That's actually not true, but
that's not true at all. But
please don't shoot a financial advisor and blame me. But I mean, if you want to shoot them, shoot them. Just don't blame me. I'm just,
wow.
Anyway, yes, Boeing is a mess. Boeing will not be allowed to fail. I can say with confidence that the Boeing company will exist next year, 10 years, probably 100 years from now, because it's too important to be allowed to fail. But that doesn't mean that you should be in a hurry to buy it. And the reason I say that is the company can still exist and go bankrupt. You can go bankrupt and have to reorganize via Chapter 11. That happens all the time, right? I'm not saying Boeing will go bankrupt, but I think it's not improbable that it could really come under distress. The passenger airline industry is not recovering anytime soon. It would have been under stress anyway. Even let's just imagine we were having a garden variety recession, right? That alone would have put a lot of orders, would have cut a lot of orders. It would have made life very difficult for Boeing. You add to that the fact that this is not a garden variety recession; it's a much deeper one. But beyond that, you do have all the social distancing issues and virus fears, everything else. Beyond that, even again, business travel may never recover to pre-COVID levels. I think pleasure travel will. It may take a while, but right now people are used to just driving or not taking trips. Eventually, they're going to get that urge to travel. The industry is going to rebuild itself, and people are still going to want to take those trips to the Caribbean or Europe or whatever. I mean, like pleasure travel will recover. It will take a while, but it will recover. I don't know that business travel ever will. You know, now that people have gotten used to having Zoom meetings, have gotten used to just picking up the phone, that you know, they sign things via DocuSign, that face-to-face meeting is not as important as it used to be. There will always be some face-to-face meetings. Some meetings are important enough to get on a plane for, of course, but that marginal business meeting that may, you know, if we can handle this on Zoom, let's just handle this on Zoom. We don't really need to go get on a plane and go see somebody and spend hundreds or thousands of dollars in transport and hotel and everything else. So I think longer term, demand for their product is just going to be less. When you add to that, they were already having problems before due to the plane malfunction issues. I just wouldn't touch it right now. I mean, it's one of those that, sure, if it gets cheap enough, and it doesn't go bankrupt, then it'll be the buy of a lifetime. Fine. But it's not a game I want to play right now.
Yeah, I hate to use the reference to the financial crisis movie Too Big to Fail, but I agree. I think Boeing is one of those companies it's too big to fail, and I don't think you're going and it won't. But again, it's just, there's just so many issues, and if you just
they got share dilution, but you think about it, like let's say they don't outright fail, but they need capital, and you know they've already done what they're going to do in the bond market. They've, you know, lenders aren't willing to extend credit at reasonable rates. What are they going to do? They'll issue new stock, which dilutes the shareholders.
Right.
What if Uncle Sam decides, well, Boeing's too important to let fail, but we're just going to take it over, you know, and they take a government ownership stake in it. At that point, the individual private shareholders get you know, squeezed out. So yeah, that's it.
At a discount, I would imagine.
I would imagine.
I don't see the government paying full price for whatever they want to take in ownership of Boeing, and I don't see if Boeing's financial situation gets worse, I don't see them really arguing about that. So, you know, technically, you know, the return-ons are awful at this point. You know, its operating margin is in the negative. You know, its ratios are very meh, if that. I look at this and I see way too many red and not near enough black in terms of just the financial information that I look at. Way too much red, and that in and of itself is enough for me to say, whoa, probably not. Now, again, I think at some point, I mean, this stock is going to continue to fall. Yeah, I know they're pushing ahead for the 737 MAX to get back on track. They're working closely with the FAA. They've already done some test flights. They're trying to get things back. But again,
all that's fine and good, but if there's nobody around,
if no one's flying, if no one's flying and no one's buying, no one's buying new jets, then okay, great. You certified a plane that no one's going to buy. Not because, and with its past issues, not even withstanding, just for the sole fact that no one's flying. I mean, you have planes that are flying at, you know, 20, 30, maybe 50%, depending on, you know, the route. Some even less than that.
Well, let's also say, let's say that you are the CEO of American Airlines. Like you've just gotten promoted. You're now running American Airlines. Would you be in a hurry? And let's just forget that American's having problems right now. Let's say they're actually in the market for new jets.
I'm looking at Airbus.
That's just it. Look at Airbus.
I'm honestly looking at Airbus.
Even if the 737 MAX is fine and has been tested, are you going to be the guy that walks out on a limb to test it out? Or are you going to be like, no, I'm just going to go buy an Airbus?
And American Airlines has no need for a 777 Dreamliner. They don't need a plane that big. I mean, they have some international routes that it might work for, but not necessarily enough to justify expending and buying 5 or 6 of them. And so, yeah, I'm looking at Airbus. Really, sure. I mean, not because you have to understand, while it's easy to sit here and say, yes, American companies should buy American. Okay, that's all fine and good. And I get that. And I don't disagree with that. However, if it doesn't make practical business sense to do so, then they're not going to do it.
Well, beyond that, are you going to risk lawsuit? Are you going to be the first guy to go out on a limb and buy that 737 MAX and then oh, it actually wasn't fixed. Or let's say the thing crashes. Let's say you buy one of those planes and it crashes for a completely unrelated reason.
Yeah,
you're still getting sued.
The PR is a nightmare.
It's a nightmare. So
you're not gonna see a Delta, Southwest, American, United. They're not going to take a leap on Boeing right now. If anyone does, it's
not at full price. Not at full price.
No.
Maybe Boeing can sell these planes at some sort of deep discount in order to move the metal, so to speak. But
even then, there's a lot of risk. I think if Boeing is going to grow past this, they cannot look at the U.S. market. They are going to have to look at Asia. They're going to have to look at China Airways. They're going to have to look at Emirates. They're going to have to look at Qantas. They're going to have to look at overseas carriers to try to get them out of this jam. Because the only other thing they can do is completely design a new jet from the ground up that is just unbelievable. That that is either so cheap and so reliable that airlines can't not buy it, or is just so luxurious that these large spending carriers like Emirates they have to have it. And I don't know that kind of R&D is necessarily in Boeing's long-range financial plan right now, considering how their finances are kind of a mess. So Boeing is a no. If you own it, good luck, I guess. I mean, I don't know that I would necessarily sell it. But then again, I'm not sure that it's reached its bottom. So it might be a good time to maybe tranche your shares out a little bit, maybe sell a third of your position or half of your position, keep the other half, depending. The Boeing stock rates a 3 overall in Adam's stock rating system. That means a 3. That means 97% of all other companies, all 6,500 and I don't know how many stocks, actually rate higher than Boeing. It's Boeing's highest ratings metric-wise come in value, where it scores a 50, and quality, where it rates a 32. And you have to look at this as percentages from 0 to 100. The lowest number being the worst, the highest number being obviously the best. It is very low in growth. It is very low in volatility, which means it is a very volatile stock. And of course, its size is massive. It doesn't even score a 1 in size because it's so big. So, it's a big risk with Boeing and not one that I'm willing to take. And it sounds like Charles isn't willing to take it either. So to recap, before we cut everyone loose for the weekend, Lockheed Martin, I'm a yes. Charles is a maybe, I guess. Waste Management, I think Charles is a kind of a yeah, maybe. I'm a no. And Boeing, I think, is a uniform across the board. Nah, not today. So that's kind of how we look at the industrial side of things. Again, if you're looking to invest, do your homework, man. Do your research. Let us do your research for you. We've come through these numbers. Charles has done his research. I've done mine. But as you can see, the opinions can vary a little bit based on either previous knowledge or how we look at the data. But at the end of the day, make your decision. If you want to invest in Lockheed Martin, who do you think has the right argument? Does Charles have it because there's not much of a market left for them to grow, or do I have it because I think that their secondary sectors can expand and push their growth even farther? That's a question to add. It's a compelling argument to look at from both sides. So, that's kind of a look there. Next week, we'll be back on Wednesday, and then not Friday, but possibly Thursday. We may be recording a little early because I'm actually going to take a day off myself. So if I don't, then my wife will probably shoot me. So I have that to look forward to. Otherwise, make sure you check out moneymarkets.com. We've got information, investment information going up every day. Charles is on there. I'm on there. You can read. We read what we write and look at our research, look at our analysis of things, and we're here to do the work for you. We're here to help you. We're not here to take a cut of your profits or anything like that. That's not what we're here for. We're here basically just to say, here, take our research and make your decision and let us help you navigate these interesting waters that are called the stock market. So a reminder that, again, you can listen to the Bull and the Bear podcast on Apple Podcasts, Google Podcasts, Spotify, iHeartRadio, a wealth of other podcast syndicators out there. We're also on YouTube. We do video this. Just go to youtube.com, type in the Bull and the Bear podcast, and you'll find us. You'll see all the other videos that we do. as well. So make sure you go and you check that out. Leave us a comment, leave us a review. If you have a question or anything like that, maybe a topic you'd like us to address, email us at thebullandbear@moneyandmarkets.com. I'll put the email address right down here so you can see it. But email us. Let us know if there's maybe a particular stock you'd like us to look at. Hey, Charles, I'd like to know what your take is on XYZ. And then by all means, we'll do that. And we'd love to get that kind of feedback. But until next time, for Charles Sizemore, contributor for Money and Markets, I'm Matt Clark, your host for The Bull and the Bear. Certainly glad you're with us. Hope everyone has a great, safe weekend. And until next time, everybody, safe trading.